Welcome back. The signals today are mixed. Growth is now seen cooling to 4.2%, but inflation is stable, and the Bangko Sentral ng Pilipinas has been cutting rates. So if the economy is stable, why is momentum still soft, and what will actually drive the next phase of growth? Joining us now is Emmanuel Leyco, Chief Economist of Credit Rating and Investor Services Philippines. Good morning, sir. Thank you for being here with us.
Good morning, Mikey, and thank you for having me back.
It's always good to have you. Okay, so sir, UANP just cut their growth forecast for 2026 to 4.2%. On the other hand, S&P says that this is temporary, that our fundamentals remain intact, and they actually see growth for 2026 at 5.7%. What's your take on these contrasting views?
Well, I think in terms of S&P view, they're looking at the macro fundamentals in the Philippines, and they still believe that economic fundamentals in the Philippines are quite strong. And I think that view is shared by many. Mm-hmm. However, in terms of the risks, I think these are the risks that need to be factored in much closer into the projections.
Okay, let's list those risks. Ano ho yung mga risks na yun, sir?
Well, the current political, well, they're not calling it political instability yet, but I think the political noise is getting much louder these days. And also, if we look at how the economy is affecting the common people, for example, the last 2 years, we've been losing jobs. Our unemployment remained high, and I think unless these fundamental numbers, statistics are addressed, they should remain, or the economy will remain shaky.
Yeah. Sir, it's a wide gap. 4.2% from the University of Asia and the Pacific, 5.7% for S&P 500. From your perspective, sir, given all the risks that you mentioned, where do you see growth coming in
I was
for
thinking
this year?
If we get 4.4% this year, and hopefully upwards, we're great. But I think below 4.4% is not a remote possibility for the Philippines.
Mm-hmm. Okay, that's so far from the 6 to 7% growth we wanted in the first half of 2025. Expectations were for 6 to 7% through 2025 to 2026, and they were even hoping for perhaps double-digit growth following the pandemic. Things have changed drastically. Okay, with growth at about 4%, sir, what's going to be the driver for that?
Well, we hope that the public spending, which has a multiplier effect for the economy, will pick up again. But maybe it should be taken a lot more seriously, particularly in the last few months, in last few years, we saw public spending being abused. And discipline, the behavior in public spending was very far from not even ideal, but based on norms. If you're spending public money, that is serious business.
Yeah.
You should observe the highest standards of fiscal discipline in public spending.
Yeah. So what does that say for our fiscal trajectory, sir? You are the chief economist of a local credit rating agency. From a credit rating perspective, how does the Philippines look today, given our fiscal trajectory and given expectations of growth of about 4%?
Well, the last time an international credit rating agency looked at the Philippines, they were expecting at least 4.8%, which was already a reduced growth rate expectation. But look at what we got last year. It was not exactly near what they were expecting. And I think in terms of fiscal discipline, this will be a major factor going into 2026 growth rate. If you are not able to manage public spending, the government is the biggest spender in the country, the biggest buyer of goods and services in the country. If you are not able to discipline yourself and show that you are using people's money responsibly, efficiently, that is not good for our credit rating. That can even place make a challenge, create a challenge to our credit rating. Remember, credit rating is a a combination of major factors, including government spending.
And sir, just to make it easy to understand for the average people watching, why is our credit rating important? What is the impact on on the typical Filipino household and the wallets of people? Why is our credit rating so important, sir?
The government borrows money, and credit rating is a major factor, major consideration in charging interest rate. If the interest rate or the credit rating of the country deteriorates, we will be spending more to borrow.
Oh.
And that is going to be transferred to the people's budget. That will be transferred as a cost of doing business by the government. That is terrible. So if we are borrowing right now, we will be charged a higher interest if our credit rating deteriorates.
Yeah. Okay. On another front, sir, the BSP has already cut rates aggressively, bringing policy rates around 4.25%, the lowest in 3 years. Yet growth hasn't picked up as much as we would have wanted it to with interest rates at these levels. Do you believe that monetary policy is already reaching its limits?
I believe the governor when he said that the monetary policy has played its role, performed its role, and fiscal policy will have to come in. Basically, when they lowered interest rate, they made the cost of money lower in the country, hoping that it will spur investments, people will spend money, but for productive uses. Unfortunately, most of the major users of lower interest rates are those who are refinancing old debt. Of course, it makes sense.
So they're not taking out new loans?
No. They're taking out new loans to replace old loans that were contracted using higher interest rate. It makes sense. If you have an opportunity to lower your cost of borrowing now, lower cost of money, it makes sense to refinance. However, if the refinancing is the major use of lower interest rate, that is not going to create any more development for the country.
We want the loans that will drive productivity. Okay, so if monetary policy is losing traction, then we turn to fiscal policy and private investment. Yun na lang. That's the only thing that we can turn to.
Yes. For example, fiscal policy. You have right now trillions of pesos in the government budget. If you are not able to use that in a productive, in an efficient manner, that will not add to the production, that will not add to the development of our economy. If, particularly the flood control projects, now people are saying that we lost trillions of pesos in those projects. We are not even close to recovering a major
meaningful amount of that.
Exactly.
Okay, and confidence is low. How quickly can this be reversed if we're able to see some accountability?
That depends. No? There are ongoing hearings, there are ongoing cases, but it looks like it's not going to be resolved pretty soon, as people are already saying that you have to make these people accountable. You have to put them in jail and give them or make them return the money that they stole. It's going to take long.
What's the danger here to the economy, to businesses? I mean, wala pa tayong nakikita in terms of accountability. And there's nothing really that we can hang on to or hope for on the horizon. What's the risk, sir, if we have no accountability?
The GDP growth rate will further deteriorate. Like we said, 4.4 is the best that we think we can see this year. However, if people's confidence, investor confidence, are not regained in the short term, that will further deteriorate. That can cost a lot of economic losses for the economy.
Yeah. Okay, moving on. Let's talk about Vista Land and the credit risk in the property sector. Vista Land is now under credit watch with 30 billion in maturing debt and some dollar exposure, while its affiliate, Villar Land, faces a criminal complaint by the SEC. From a credit standpoint, sir, how serious is this?
Well, we maintain the AAA rating on Vista Land. Villar Land is not a credit. We're not rating Villar Land. Vista Land is our rating. and we maintained a AAA rating on them. We remain confident that they will be able to manage their debt, but we put them on credit monitor. They're undergoing negotiations with their bankers, and the reason we put them in under monitoring is that we want to see progress.
If they're able to pay their maturing debt and their dollar exposure, if they're able to pay that down. If they're unable to, what next?
We'll either downgrade or pull out the rating and put the appropriate rating for them. If they are unable to make the payment, that could be a default. That could result in a default rating, which we think at this point is not
on the horizon.
In the horizon.
Okay.
Remember, there are many covenants, financial covenants that they have to meet before they actually unable to make the payment.
Yeah.
So they need to make sure that their current ratios, their debt to equity ratios are met before you are declared in default. So there are many flags that are in place before we say that they are in default.
And people are saying this is a serious test on regulators about enforcement. What do you think is the broader effect on the Philippine property sector?
Right now, as we all know, the property sector is experiencing a softening of the market. Not many are buying, and not many are starting out new projects. So for now, I think people are keeping a watchful eye on the property sector. So the property sector in general is being watched by in both investors, regulators, and even consumers. Household buyers of new units are saying, how can I buy the lowest part or the lowest price in the market, knowing that there is a declining, a softening of the market. But right now, not many are giving people a bargain. You know, maybe they're just saying, okay, we'll give you interest free for now in the down payment, or they will put in or throw in new invitations, something that will make their properties attractive. But we're not aware of major price declines in the property market these days.
Okay, moving on to another segment of the economy, consumer and retail signals. The SSI Group, their Marks and Spencer, is exiting the Philippines after 40 years. What does this tell you about consumer demand today?
Well, Marks and Spencer, when they started, they sounded like they're the only game in town.
And 40 years ago rin naman yan.
And that's 40
Since
years
then,
ago.
may Uniqlo na, may H&M, may Zara. Okay, so what are your thoughts on this?
Well, even Uniqlo, even Zara, even H&M, they cannot rest on their laurels. The consumers are very, very sophisticated with their taste. If you are not able to provide the clothing that they think they are good for them, they're not going to buy from you.
Yeah.
Marks and Spencer used to set the standard. So if you have an M&S dress or a suit or a shirt, you're good, you're in.
Yeah.
But now, you can go H&M, Uniqlo, and there might be even better.
There are e-commerce channels, so
definitely.
you can even buy unbranded. So parang nalaos na sila.
Well, not exactly laos, but I think their business logic is no longer a monopoly of the big brands.
Okay, moving forward in politics and confidence heading to 2028, the 2028 race is already taking shape. Vice President Sara Duterte has already thrown her hat in the race. Our President Marcos, said last week that our next leader needs to have a firm grasp of economics. What are your thoughts on the qualities for the next leader?
Well, every president, everyone who dares to lead the country should know his or her economics. not only the future president, but they should have
Every-
known economics, particularly development economics, and they should have a vision. They should have a point of view. So when you ask me, how is the economy doing, I would always say, well, it depends on from whose perspective you're looking at it. So from the perspective of the common people, the majority of our people, the economy is not doing great. They lost jobs. They lost their purchasing power. It eroded their purchasing power. But for major businesses, it sounds great for them because, look, in the last few weeks, they've been reporting major profitabilities. They've been showing strong business performance last year. But contrast that to the plight of many of our workers who lost their jobs. Look at the farmers whose products are no longer profitable or marketable to the people because they really lost competitiveness.
And I want to ask you, sir, ask you bluntly, Vice President Sara Duterte, do you think she has the leadership profile and the policy credibility we need as she wants to assume the highest office in the land?
I think the Vice President will have to answer the questions from the people. How she spent her budget during her term or tenure as Secretary of Education and now as Vice President. There were many questions that were thrown at her. And I think it will be up to the President to convince the people that
there's a lot that she can say, but what about the track record speaks for itself. Based on what you've seen, her performance thus far, do you think she has what it takes?
Well, she hasn't shown it yet. No, maybe if she is given a bigger platform, if she were able to answer what she did as a Secretary of Education with the finances and as Vice President, I think people will give her a chance. But so far, people have raised questions on her fiscal management of the departments that she was able to.
Is there anyone, sir, in today's political landscape that you think fits the bill?
Well, I think it's too early to see who will be on the starting line. But right now, there are quite a few who are already saying that, well, they are not expressing interest, but they are already identifiable candidates.
Pero sa nakikita nyo ngayon, sir, do we have do any of them have the qualities that we need to lead the country, given the economic trajectory that we're in?
I haven't heard the platform that would put forward an industrial vision, an agricultural vision, a candidate who could say that, look, we have millions of Filipinos we sent abroad. And they were sent abroad temporarily because we couldn't create jobs for them, 40 years ago. But now, 40 years later, they're still abroad.
They're still there. That was supposed to be a stopgap measure. But at the same time, when you look at our growth of about 4%, with the population continuing to increase, how are we going to create the jobs for all these people with growth at mga 4%?
I think we need to have a viable economic strategy. Productivity. We have to look at our agriculture. We have to look at our industries. And look, 40 years ago, we were better than Indonesia, definitely Vietnam. But look where they are now, 40 years later. They have surpassed the Philippines. And that's really sad.
Yeah.
I taught for many years at a regional management school. They used to come to us as students.
To come to us.
To
learn.
We taught them.
Now we're a case study for a different direction.
Exactly.
All right. Professor Leyco, thank you so much for your time with us this morning. So good to always learn from you.
Thank you.